Joining us with this morning's market analysis, Alan Brugler with Brugler Marketing. Well, as we start a new week and a new month here, let's talk about weather and planting progress. Those are going to be kind of the main focuses for this market, aren't they?
Yeah, I think the market's be very much focused on the weather here. We're still debating how much of the planting delay is permanent, i.e. the ground going to prevent plant, and how much is going to be planted past the optimal dates, which we're definitely in that situation for corn. And looking ahead to the weather, 6 to 10 days gave us a bit of a window here for most of the corn belt to get some rapid planting progress. So I think with the prices where they are, we'll see some pretty aggressive numbers. Whether those show up in USDA's weekly report today or next week will be the question.
So as far as prevented plant, a lot of times we don't, the market doesn't care as much about the Dakotas and Minnesota, but this year we need every acre. So it is important, isn't it?
Yeah, it is very important. We can't afford to give up more than 1 or 2 million acres on either the corn or the beans before those balance sheets start to get really tight. I think that's why the market's been so herky-jerky here, where you see 30 and 40 cent moves in beans without very little basis to them. It's just we don't want to give up that ground if there's any incentive for the producer to continue to plant.
So grain market on Friday, we had soybeans hitting some new contract highs, corn and wheat futures, maybe a little bit more of a down week last week. And so do you think soybeans will continue to score contract highs, and is the top in the corn and wheat or not?
Well, we got a new contract high in the old crop July. We did not get a new contract high in the November beans on last week. We're still trading within the trading range from February, actually. The market's going to continue to put in risk premium until it's comfortable that we know what those acreage figures are and that most of the crop got in. We do have to remember that there's some demand destruction going on here too. That we are losing some foreign customer buying. The COVID lockdown in China has definitely reduced their soybean oil consumption, things of that nature.
Well, thanks for joining us with that market analysis. Alan Brugler with Brugler Marketing. More Ag Day coming up.
To talk to Alan about his ag market professional services, call Brugler Marketing and Management at 402-697-3623 or visit his website, www.bruglermarketing.com.